Good morning. Here's your 2-minute roundup of the biggest financial stories out of the US and Canada. We start on Wall Street, where stocks just closed their best quarter in 6 years. The Nasdaq surged over 1.5%. The S&P 500 climbed nearly 1%, both riding a wave of AI and semiconductor optimism. For the quarter, the S&P is up more than 14% and the Nasdaq nearly 20%. Meanwhile, the US dollar is sitting near a 13-month high as the Japanese yen crashed to its weakest level in 40 years. Traders are betting on Fed rate hikes, and that gap is pulling global money straight into the greenback. Speaking of the Fed, new chair Kevin Warsh held interest rates steady this week, in the 3.5 to 3.75% range. But markets aren't convinced the pause lasts. Futures now show nearly a 2/3 chance of a rate hike by September. In corporate news, Nike beat earnings expectations but missed on revenue, sending analysts scrambling to figure out what's next for the stock. Now let's head north of the border. The Bank of Canada held its key interest rate steady at 2.25% this week. Governor Tiff Macklem says the financial system remains stable, but warned that global turbulence is raising new risks. Royal Bank of Canada posted strong quarterly results, boosted by its HSBC Canada integration, though the bank was also hit with a $4.25 million fine from Canada's Financial Consumer Agency. And trade is back in focus. The US, Canada, and Mexico are meeting this week to review their trilateral trade agreement following months of tension between Washington and Ottawa. That's your 2-minute market wrap. Follow for daily updates. See you next time.